Well, when it comes to commodities, our next guest says there's a bit of misconception that everything's moving in the same direction. For more on this, as well as other business news from the TSX to uranium, we'll cover it all. Mark Lackey, he's the Executive Vice President of CHF Capital Markets. Mark, great to have you on the show.
It's great to see you, Pat.
Okay, we see today that oil prices are down, gold prices are down. Commodities do act in concert a lot of days.
Some of them do. I agree, Pat. But if I was to take you to palladium, palladium's actually had a very good year. Why? Because on the supply side, there's been limited supply coming out of South Africa and the same situation out of Russia. So I think it's important that people tend to follow gold, they tend to follow oil, they tend to follow silver, and to some degree copper. And then when they get to other commodities, they don't look at them quite the same way. And I'm saying that yes, the macro factors such as world economic growth and the value of the US dollar are important to look at. But don't just say that every commodity is going to necessarily move in the same fashion. We're going to talk a little bit about uranium later, and I think there's a commodity that has excellent upside in the next couple of years, regardless of how oil moves or gold moves or silver moves.
Well, it could be said that oil and gold are just a competing currency, and they are priced in the US dollar. That seems to be a big driving factor.
Well, it's a driving factor for all commodities, but I would argue it's obviously a bigger driving factor for something like gold, because when you look at people that invest in gold, one of the big reasons is when they lose faith in paper currencies, they tend to move to gold.
Yeah.
Whereas people are not going to buy zinc or copper or lead because they've lost faith in, say, the US dollar. It's going to be based upon the supply and demand conditions that exist in those particular commodities.
Yeah. The other thing you see, of course, and we saw it again today, is the Canadian dollar under pressure. That's the stronger US dollar is hurting everybody out there. Is the stronger US dollar at play when you look at the TSX? I mean, we are in negative territory, I think, so far this year.
You can't deny that it's a factor because at the end of the day, look how big a factor gold and oil are in the markets. Certainly, they're bigger factors than either, say, zinc or copper. Or even uranium. So there's no question it's a factor. I guess my point would be that I'm not a huge fan of the US dollar, given the twin deficits that exist. So I tend to feel that the US dollar is actually going to weaken over the next few years. And that the Canadian dollar will actually see some recovery from its present levels, getting back to at least par in the next year.
When I'm looking at the TSX, though, the peak for the TSX was March 2011, and the venture exchange, I guess, at the same time. I mean, are we going to see a stronger market as a result of some of these moves?
Yeah, I believe that. I mean, I think that's an interesting point, because we go back to March 2011, what exactly happened at that point? I think that was when it became quite clear that Europe was in trouble, that Greece was going to need a serious bailout, that effectively the country was bankrupt. And I think before that, people said, we can all muddle through, we'll make a few changes here with the IMF and everybody will be fine. Well, it became quite apparent at that point. So, of course, what happens in that situation is that if you're a commodity markets, what's considered somewhat riskier, everybody starts moving their money to U.S. Treasuries or to German bonds. And that's exactly what happened. But I now believe that I think the worst is over in Europe. I'm not saying Europe goes back to the days where it grows significantly. I don't think that's going to happen. But at least I don't think Europe's going to crater. And I think as long as Spain and Italy can maintain a decent fiscal balance over time because of the size of their economies, I think we'll be okay.
Okay, if Europe's okay, what about China?
Well, again, people say to me, geez, China used to grow at 10%, now it only grows 7.5%, but it's the second biggest economy in the world now. And I spent a lot of time looking at China, India, Indonesia, Turkey. I look at all the countries now that are in the top 20 that a lot of people don't realize. Brazil is the 8th biggest economy in the world now. So we spent a lot of time looking at those numbers, and again, I don't see China growing less than 7.5%, and while that's not 10, it's still strong enough to keep commodities, in fact, advancing down the road.
Okay, now if those are the macro environment, you also look at smaller issues, if you will, and uranium is something you want to talk about.
Well, yeah, and I think the one issue here is that when people say to me, what commodity do you really like in the next couple of years, I really like uranium. And now uranium, of course, took a big hit starting in March of 2011 with the Fukushima accident. And we've gone from $72 down to actually $39.75 yesterday. Now, as you know, Japan had 56 reactors in play. They now have 2. So the key to this situation is going to be 2 things. Number one, I think the Japanese government can start the reactors back as early as August. And some analysis that we did indicated that if you started 30 of those reactors back in the next 6 months, you could cut power costs by 30%. I mean, Japan's not...
This is all the Japanese are trying to get their economy going anyway.
Exactly. I mean, if you want to keep Toyota and Mazda producing the kind of levels they are in Japan, you can't keep using $16 an MCF gas to fire your plants. And that's what they're doing. They need to have those reactors back. And we have a lot of indications that the safety test will be passed. And I'm actually predicting 40 of those 56 are back in play in a year. On the other supply side, the Russian HEU, highly enriched uranium contracts, do end this year. That's another, say, 24 million pounds out of the market. The Japanese had been selling about 15 into the market and not using another 20 on demand. So all of a sudden, you start adding up the numbers, you're looking at close to 40 to 50 million pounds being needed in the marketplace, and there's not that much new supply out there. So I think I can see, in fact, we are predicting that the price of uranium, which is $39.75 now, in a year and a half will actually be back to 65. Now, I know the street doesn't tend to agree with me on that, but I think when you look at all the conditions, we think uranium has that potential.
How do you play that?
Well, in fact, that's interesting because when I was at Blackmont, we followed 60 uranium companies, and now I follow about 7.
Yeah.
So there's very few players. I mean, if you want to play the less risky one, you buy Cameco. But I am playing actually Forum, which I will say for disclosure purposes is a client of CHF, and it's also a one that I own. And I own down here at 35 cents. So I'm playing it because it's got a great play in the Athabasca. They have properties right beside the Fission Alpha play. Any of the people that were fortunate enough to buy Alpha, I owned it. I wasn't smart enough to keep it a long period of time, and the stock's gone from 20 cents to $4 this year because of the great find they've had at Patterson Lake. Who's got the property right beside it and on trend? Forum. So Rick Mazur's got money, he's doing a lot of drilling, he's got a very strong team. So that's one of the junior ones I'm playing. You always should probably have a bit of a basket, Pat. Yeah. But there is very few players now left in the uranium market. So if I'm right about the prices, there's going to be some great opportunities because there's not going to be that much competition in terms of who do you buy.
Mark, great to have you on.
Well, Pat, it was great to be here. Yeah, I will be.
Mark Lackey, Executive Vice President of CHF Capital Markets.